That was the big speculation. People in their mind wanted the gold rush, but the people that were smarter actually knew all these people are going to need tools to be able to actually get the gold. And those are the people that made the money.
All right, and we are back again with the Mind the Growth podcast. As always, I am Chris Kinghorn.
And I'm Eric Hoffman.
All right, Eric, so today we've got some exciting topics to cover. I know we talked about switching up the organization of our one-on-one interviews, so we want to make sure that we touch on a handful of topics, and we want to hear your guys' feedback. So make sure to give us some feedback below in the comments, what you liked, what you want to hear more of, and let's go ahead and kick this off. So Eric, I'm going to let you take it from here.
Yeah. So what do those YouTubers say? Smash that like button, ring that bell. Subscribe.
Oh, annihilate the like button. Make sure you're subscribed. So we're at about 14 to 15 subscribers right now. Let's see if we can get to 30 here in the next week.
At least 16. Get us there, people.
Crank those numbers up.
All right, so let's go through some of the segments we've pitched and see what might fit. So I'm going to just go through the list from start to finish. We got Inflation Watch. We got IPO Mondays. We got Stock Market Sundays. Bear Tuesdays, Bull Tuesdays, depending on where the market's at. Interest Rate Wednesdays, the Real Estate Report, Startup Sundays, Cabernet Corner, that one of my favorites, the Napa Report, Crypto Corner, I think was another one. What was the last two that I had?
Wine/Watch Wednesdays and Investor
Wine
Insights.
Wednesdays.
I think that yours were a lot more professional and strategically thought out. I think I was just shooting from the hip of.
I love it.
I did like Cabernet Corner though. I thought that was pretty funny.
All right, so I think today we're gonna have a segment of Crypto Corner because there's a lot going on in the crypto world, and maybe some investment insights. I don't know if you have any wine on your mind, but we can dive into that too. So. Let's start off.
I think crypto and investment's good, especially we've got interest rates that are as of yesterday were bumped up. So
yep.
I think that's could be some good topics to touch on today.
What did it wind up being? I didn't even look at the
1/4 point.
Yeah. Okay. All right. So wonderful news. Let's dive into some crypto stuff. The biggest news in crypto. Do you follow NFTs at all?
I do, and some of the feedback that I've gotten, and I think that we should kind of approach this in a little bit more of an elementary educational way is, so I think a lot of our listeners are going to know what NFTs are, but once you share the news that you're going to share, can you highlight on the larger effect of that, kind of the NFT ecosystem as a whole exactly?
Yeah, so NFTs, it's an acronym for non-fungible tokens, which essentially means it's a digital signature, one of one, that you can confirm ownership of through the blockchain, whatever layer 1 blockchain it's written on. Most of them are on the Ethereum blockchain, level 1. Now that Solana and Avalanche and Cardano and some of those other layer 1 chains are out there, there's more specifically on Solana. But the major ones are still on Ethereum. So that's what we're going to stick to today. The OGs of the NFT space, really the OG in my view is CryptoKitties. That was in like 2016, 2017. Those were huge. And they kind of went crazy and then just went away. I don't even know if they're still trading out there. But since then, the other major project that was, in the zeitgeist was a group called Yuga Labs that created CryptoPunks. CryptoPunks, let's pull up a version of a CryptoPunk so everyone can see.
Isn't there also some rumors out there, I guess, that haven't been proven true or false, that one of the individuals who could potentially be Satoshi, which was the founder of Bitcoin, was involved in the CryptoPunks early on? Is there?
I haven't heard that.
Okay,
maybe.
Okay. I've heard a little bit about that, so I was curious if you had heard that as well.
Are you? Oh, okay. Here we are. So these are CryptoPunks. It's like a little JPEG pixelated image, and the creation of them. Originally, Larva Labs released the CryptoPunks project, and ultimately with NFTs, most NFT projects, they release X amount of them that have different attributes, some more rare than others. So just like in trading cards or any collectible sort of thing, there's going to be ones that trade for a higher dollar amount or crypto amount, depending on what denomination you're looking at. In this case, CryptoPunks, there was 10,000 of them that were uniquely generated characters. And, the alien ones are what most people talk about because they're the most rare. Those are the ones trading for millions of dollars now. And then everything else, I think the floor price was around 180, 200 grand as of today. So that was what, in the last year and a half, everyone was trying to get into, is CryptoPunks. About a year ago, there was another project called the Bored Ape Yacht Club that was created by Yuga, Y-U-G-A Labs. And to show the difference, the Bored Ape Yacht Club, similar idea. There was a bunch created, and they're less pixelated than the CryptoPunks. And the unique thing about the Bored Ape Yacht Club was that the Yuga Labs team, they created them with a broader business plan in mind, meaning they gave IP rights to holders of Bored Ape Yacht Club, whereas CryptoPunks, you didn't technically have any IP rights. And there's already been some projects that have been, released that certain holders of Bored Ape Yacht Club apes have made money off using them. So their picture is much more broad, which we'll kind of get into. Over the last week, when was this announced? I think on March 11th, so about a week ago, the Yuga Labs team, they actually bought the IP rights to CryptoPunks and their second project called Meebits. Larva Labs created a second project that was like CryptoPunks, but more of a 3D avatar that are called Meebits, and we can pull those up too.
So without going fully Gary V on me,
yeah,
what is the value in owning a JPEG? And ultimately, now that we're seeing that the purchaser of these NFTs are now able to obtain and kind of hold some more of this IP, it seems like that's where the direction that it's going to go in the future. Is there a higher value then placed on those NFTs than those in which you don't hold the IP? I've been looking at NFTs for quite some time. I haven't dove in. So this is a perfect segment for me because I understand it, but I don't know it too well. And I want to ask very elementary questions for, those who are similar to me who are on the fence of, okay, is this something that I invest money into? Do we dive in or not?
Yeah, so that's the proverbial $1 million question, as they say. So we'll see what happens. But I mean, generally, if you hold an asset, you preferably would want IP rights over not having IP rights because it allows you to do additional things with it. Not that any individual owner, like if I went out and bought a Bored Ape NFT, I'm not going to go myself to Disney and say, let's create a show or a movie surrounding my individual Bored Ape. They're not going to take my call. There may be other holders, like Steph Curry happens to be an owner of a Bored Ape, and there's other famous people that maybe they would in turn have their IP rights utilized much more effectively, and that might benefit the entire ecosystem. So my theory is that it's better to have it if you have the choice. So where the CryptoPunk holders may disagree with that is, I think what made those special is a lot of people consider them the, OG of NFTs, the original, art project of the NFT space, and they are exactly what they intended to be. They're CryptoPunks, so very punk oriented, that type of mentality, alternative to the mainstream. And that's why they're pixelated and all of that sort of thing, just like a basic art piece. And so holders of that really hold on to that opinion and theory that they're the original. They'll always be the best. They'll always be the rarest. And that's why they went up so much in value. Over the long term, I think they're both going to continue to increase in value, both the Bored Ape Yacht Club and the CryptoPunks, now that Yuga Labs is overseeing the entire project. Since they bought the Larva Labs IP, and I think with it came a few hundred, so 423 CryptoPunks and 1,711 Meebits. I guess Larva Labs, as the developers, held that amount, and I think they were selling them slowly over time just to, get some cash. But overall, they'll have lots of them to work with, and now they're building their own metaverse where they're going to have real estate purchases in their own metaverse that you can purchase either as an NFT holder or not. And they're trying to create a whole ecosystem where these NFTs have some use case, and maybe they have special access to certain things. I don't know their end goal, but they also, as of today, released their own coin, their own crypto coin called Ape Coin. Which I happened to ape into this morning, no pun intended. I bought some at, I think, $8.50. It's been going between like $7 and $10. It reached a peak of $40 like before trading really began, and went back down. So we'll see what happens with that. But I figured I'd throw like $2,500 at it and see where it winds up.
It goes to the moose.
Yeah. It might go down to $1 today, so it might be a bad bet, but we'll find out.
Not investment advice.
Yeah.
Not financial advice.
Caveat. So ApeCoin, you can see here. They released their coin. So the floor price crashed 30% when it released. So these things are volatile, and they'll go up and down. But I think the grander scheme of what they're looking to do is interesting, and they have now hundreds of millions, if not billions of dollars at their disposal to start developing. And I think it'll be interesting to see how that winds up. So I don't know if I answered your original question fully, but was it, why would somebody buy one of these? What would be the purpose?
Yeah, it's let me maybe add some additional information in there. Is there's so many different options. I guess buying an NFT is the same thing as buying a piece of art or buying the rights to music or whatever it might be. There's so many different options. So like, what is it? Marvel and I believe Disney are now part of VV or Akomi, whatever that ecosystem is. Is it smarter? Is it safer, I guess, safer/smarter? Is it a hedge to essentially buy the cryptocurrency instead of the NFT, or does it make more sense to buy a variety of the NFTs? You're going to obviously get more of a return if you buy the NFTs and they pop, but what's the likelihood, especially as there's more coming into the ecosystem? We have seen within the last month or so, there's been a little bit of a depression in price. Are we past this excitement within the last year and a half of NFTs are here, NFTs? It was kind of like the altcoin craze. There was Bitcoin, and then there was altcoins that were rallying, and then you had NFTs that were rallying like crazy. Are we getting towards the end of that? A lot of questions, a lot of thoughts going through my mind, but just trying to unpack all that and understand how do you identify the right NFTs to purchase? How do you make sure making sure they're right on the right blockchain is pretty straightforward. But understanding the right groups to buy, and if you buy the NFT itself or if you just opt for the coin.
Yeah, so my personal theory and what I've practiced is the underlying asset, meaning the blockchain and the coin associated with the blockchain. That's absolutely a safer bet to invest into than to speculate on which NFT is going to be a huge one. I remember when Bored Ape Yacht Club came out and they were starting to gain traction. I think the floor price was like 0.24 ETH, maybe a year ago now. And everyone was talking about how CryptoPunks, which were still trading for, 50 to 100 grand each CryptoPunk, everyone's like, yeah, these are still going to be the best ones. So don't waste your time with the Bored Ape Yacht Club. And I thought about buying a CryptoPunk because a friend of mine bought one when they were like 30 grand, which great for him. I thought about it. It was just a little too much for my taste at the time. Bad decision in hindsight. But then looking at the Bored Ape Yacht Club, I was like, maybe that'll be something, but I don't know. There's just so many out there, and it seems like a fad. I actually wound up buying, and we may have talked about this in the past. I bought a few, what were they called? The basketball trading site for NFTs. It's like trading cards online.
Right.
What the hell is it?
Yeah,
called?
did they?
Which is a bad sign.
Yeah, I bought this NFT. I don't know where the hell it is, but it's on a wallet somewhere.
NBA Top Shot. So that was like all the rage when Bored Ape Yacht Club was coming into the atmosphere. So I bought a bunch of those, which I still have, and maybe that'll turn into something longer term because they do technically have licensing with the NBA. And so naturally, I think that's a good sign whenever you have exclusive rights to something with a major brand. That's typically a good thing. So I spent way too much speculating there, and it's essentially worth zero until I sell it or somebody wants to purchase my moments, is what they call them in the Top Shot world. So that kind of left a bad taste in my mouth, which is probably why I didn't go into some of the other projects. So to answer your question, it's almost impossible to know which ones are going to make it. Now, if you were to buy a Bored Ape or a CryptoPunk, I don't see it being another 10x investment. It may still go up relatively, but it's not going to be what it was, starting at $100 and going up to 500 grand. That's not real anymore, I don't think. So I still hold the opinion, if you're wanting to invest in the crypto world, just invest in the underlying asset, which in this case would be Ethereum, because these NFTs, CryptoPunks and Bored Apes and Meebits and all of those, they're built on the Ethereum blockchain, so they need it to survive. And that would make sense to me to just buy ETH if you're gonna want to speculate in that way. So that's what I've done. And some of the other things, it depends on what you're really looking to do. If you had unlimited funds and you wanted to play around, buy ETH, buy Bored Apes, buy CryptoPunks, buy everything, and see what does best. That's the VC model. So invest in 100 things and expect 1 to 1000x, and then you hit big. So that's, I think, what most people view it as now. If you want to search for the next big NFT project, the best way to do it is to go on Twitter, go on Discord, find, who's talking about what, follow some of the major people like Gary V, who is really into the NFT space. And they're always talking about newer projects that are coming up. They're investing in newer projects that are coming up. And
it's insane that a guy like Gary or somebody else his comments can cause a project to gain traction too.
For sure. Yeah.
It's essentially network effect, and if you're following these individuals, you can place your bets in a safer arena or realm, I guess.
Yeah. So in fact, there was another one that more recently came out. So the founder of Dig, I'm blanking on his name. So he started this company called Proof. Kevin Rose. Okay. So Kevin Rose, he founded the website Dig back in like the early 2000s. He's actually friends with Gary V. and
Okay.
he got really into crypto and the NFT space early on, and he has a bunch of CryptoPunks, and he may have some Bored Apes, I don't know, but they released an NFT project that was more of a generative art project, and they released them, and basically, if you had a proof token, then you were able to mint one of the projects. And so there was someone that came out, and another generative art project that was big early on was actually developed by Larva Labs. It was called, hang on, Autoglyphs. I'll share my screen again. So this was an early generative art project, basically meaning a computer put together an algorithm that creates different art pieces. So these actually became really popular too, and they have a big following online. Let's see what their price is. So, I mean, this one...
It's a very high-end QR code.
Yeah, exactly. So this one
very
you can
expensive QR code
for 20 grand. But with proof, I guess Larva Labs partnered with Kevin Rose to basically create a new version of this. And somebody online found, like, if they zoomed into the art piece, there is like this Morse code at the top, and they created this like treasure hunt where if you figured out the code, then it leads you to this Ethereum account where you can get, I think they got like, I don't know, $500 in ETH and one Meebit, one of their NFTs, as like a gift. So that was interesting. I thought that was a cool way for NFTs to show some use. So I like the space because of that sort of thing. I think it's going to be more useful with musicians starting to utilize it more, creative people where their NFTs that they sell and create have much more of a use case where you get special access to different things, and then more of the money goes towards the creator versus having all of the middlemen like a ticket master or a broker or whatever take the majority. So I definitely think they're here to stay, but they're going to continue to morph and gain value with different types of use cases.
I absolutely agree. And kind of where I wanted to pivot next to was some investment news based on within the cryptocurrency digital ecosystem. So we're seeing a lot of institutional investors now not only invest into, I mean, there's a handful that are investing into Bitcoin, et cetera, family offices, institutional funds, et cetera. But what we're also seeing is institutions invest into complementary companies that are not necessarily buying a piece of Bitcoin or an NFT or any sort of Ethereum, et cetera, not the coins themselves, but investing into companies that are building infrastructure around them, et cetera. And the VCs as well too. The VCs are just diving into blockchain companies. I mean, we've got hinting back to Ethereum, a builder on their blockchain called Consensus. $7 billion is MetaMask tops 30 million users. So 30 million users that company in that ecosystem now has, and they just raised a previous round in 2021 and late 2021 in November. They just did a D that's a valuation of $7 billion. So there is some crazy money that is ultimately being invested into the ecosystem. And it's not just, hey, we're going to buy the coins, but investors are getting in, it seems like, any way they can, whether it is, and a lot of it's based on their investment thesis or any sort of restrictions that they might have on their firm or regulations that might be on the firm. But we're seeing VCs invest into blockchain companies. We're seeing companies actually purchase and buy cryptocurrencies. I'm sure there's companies that are buying NFTs as well too, investing into companies through the traditional stock market that service or build infrastructure or components or whatever might be needed for specific blockchain. So it's a shift, and I think it's going to be a new segment. What is there? What is it? 7 or 6, 7, 8 segments. Why am I drawing a blank, Eric? In regards to industrial, there's is it the Dow Jones, or is it the anyhow?
I don't know what you're
crypto,
asking.
yeah, cryptocurrency, in my opinion, is the ecosystem is itself is going to become the next segment where investors are placing their money as well too, because you've got real estate's one, you've got industrial is one, you've got technology is one. It might kind of overlap.
I think I know what you're referring to. I don't know the acronym or the word either. But
I'm gonna have to find it. It's gonna drive me
search
crazy.
for it. So this is the picks and shovels model. I don't know if you've heard that being used before, but back in the gold rush days, the people that actually made money are the people that sold shovels and picks for people to start digging for gold, because gold was speculative and nobody knew how much of it was there, how much of it was left, etc. So that was the big speculation. People in their mind wanted the gold rush, but the people that were smarter actually knew all these people are going to need tools to be able to actually get the gold, and those are the people that made the money. So this is a tried and true method of investing, is fund the companies that are going to allow people access into new ecosystems that are going crazy, especially crypto. So I think it's a great model. There's an interesting dichotomy, though, to Web3 and this model and companies in general, that the whole purpose and the draw of Web3 and crypto in general is that it's more of a decentralized system, meaning no one company or one group owns the actual system itself. Therefore, it can't be taken over, hacked, done, used in a way that the original intention wasn't there for. So to give you an example, a lot of people today complain about tech companies like Google or YouTube or Instagram, utilizing their power to take content down or shadow ban people or do whatever they choose for what their view is as the best plan for the ecosystem, even though people would disagree with that. And we've even seen more recently with the Ukraine issue and the war that Russia started in Ukraine, that the founder of DuckDuckGo, which was created as a private internet browser to take on Google, because Google exactly. uses everyone's data to create their business model. So they even chose to downrank Russian content because they viewed it as misinformation, and whether it was or wasn't, that goes directly against their original core business model. And so people were so pissed when they did that, and I would imagine they're using hundreds of thousands, if not millions, of users as a result of that. So it's that type of mentality where everyone loves Web3 because that can't happen. It's a programmatic method of controlling data over the internet. And so in that sense, companies like a MetaMask, which is basically a Chrome browser extension to hold crypto as a wallet, I use it. I think it's great. It's an incredible tool. But even they froze certain accounts that were in Russia and Ukraine and things like that. That's totally against the mentality of crypto. It's supposed to be used for everybody at any time for any reason whatsoever. That is at its core what crypto is about. So there's a lot of money to be made building what I call Web 2 companies for Web 3 applications. MetaMask is a perfect example of that. But I'm curious how it's ultimately going to play out. I think it's inevitable that companies like MetaMask and others that Consensus in particular are investing in and building, they're going to be what people use, because it's a lot easier to get people into the crypto space if they have an on-ramp, which is something like MetaMask. All you have to do is download it from the Chrome extension store, and you're ready to go. You can trade, you can put your money in there, and it's relatively safe, just as safe as anything else would be on an internet browser, including accessing your bank account through Chase or Wells Fargo or anything like that. So that's my little spiel on VCs and their model and how it works in tandem with Web3 stuff.
Well, and then kind of back to the true decentralization aspect. I mean, I think Ukraine is a perfect example of why it's helpful to be completely decentralized. So is any sort of country that is going through either some sort of civil distress or their currency is just absolutely just tanking. Being able to have access to your own funds in a decentralized way, that's the most idealistic situation for them. However, if you look at the United States, if you look at Canada, if you look at Europe, if you look at countries where there's not as large of a risk of, hey, we're not worried about a default. I guess I shouldn't say that because our debt's going up like crazy, but ultimately we're not worried about a default. So
well, it's nice to be the world reserve when
exactly
your currency's inflating to hell. You can just print more, and everyone will be like, okay.
But this sense of a need for a decentralization it's not really there. Ultimately, I think a lot of the consumers, what they care about more so, and it could shift away from this, but ultimately it's ease of use. So why do people like Coinbase? Why do people like some of the exchanges that are so expensive to use, but they're the easiest to use, and they just plug right into your bank account? So I think the sense of simplicity is an important component. There also has to be the sense of security as well too. But I think we've talked about this quite a bit. Is this getting to 100% true decentralization? It's probably not going to happen, and if it does happen, it's going to take so long in order for that to be a priority, I think, for the end consumer.
Totally. And I mean, that was the original prospect of the internet back in the 70s, 80s, and 90s when it was developing, was that it was more of a decentralized way to transfer data wherever you want to transfer it to on a computer. So I think that's always been my opinion with crypto. It's the rails on which financial transactions will eventually all happen on, versus utilizing something like the SWIFT system, which everyone's heard a lot about and everyone's an expert in now that the Russian conflict in Ukraine happened because we took the sanction approach to take Russia off the SWIFT system, which basically means they can't easily transfer money to another country or entity. So it's that sort of thing that I think crypto really enhances, is the cost of transferring money and the ease of transferring money. There's no longer a need for 60 middlemen to touch the money that you're intending to wire transfer to either a relative or a business or whatever it may be, and pay however much a bank charges you to make that happen. You could do that pretty much instantly on the internet with cryptocurrency and get the same outcome. So I think that's long-term view what the core tenet is, and I think banks are going to adopt this technology. Governments are going to adopt. They'll be required to, because they'll be left behind if they don't. So we'll see.
I still love the example, and I know people talk about it all the time, but if you are in New York at 6 p.m. and if you wanted to get $10,000 to Paris, it would be faster for you to go get the cash, hop on a plane, and fly it over there and drop it off than it would be to wire the funds, because it's not going to post until it won't go through the weekend. You're looking at Monday or Tuesday.
Yeah.
Which is ridiculous that it's 2022 and that's what you're facing.
Totally. It makes no sense. So, and the internet never sleeps. Bankers do. So, it should tell you everything.
It depends. I mean, it depends on the banker.
Yeah.
Okay, so I found it. It looks like it's 8. industrials, finances, telecommunications, energy, consumer, discretionary, information technology, healthcare. Cryptocurrency is going to be the next one. Unless it gets looped in with finance.
Could be looped in with finance. It could be looped in with energy. We'll see. There's a lot of talk on energy. In fact, Europe
telecommunications.
I don't know if you saw the EU.
Proof of work. They're going to be all right with proof of work for a little bit longer. So we'll see. No.
Yeah, I don't see how they would have regulated that to begin with, which is maybe why it didn't go through. But they put up a proposal to not have proof of work systems function in Europe, which would have been insanity. So,
if we look at Ethereum is they released an update that the testnet is live for ETH 2.0, and they're moving from proof of work to proof of stake. So, could that be the future for more of these coins as well? I mean, Bitcoin's obviously the big one. I don't know enough about the underlying technology to understand what that transition would look like, if it's even possible.
I don't think it is. I think Bitcoin will always be proof of work based on its core purpose and its core, underlying technology. And with that, there are companies and even governments like El Salvador that adopted Bitcoin as their national currency that are getting creative in how Bitcoin's mined and what energy source they're using. So, for instance, in El Salvador, they're using one of their active volcanoes as their energy source to mine Bitcoin, which is great. That's pretty green or red if you want to call it more of the lava approach. But there are other companies. In fact, a friend of Brandon's, my younger brother, he works for this company in Texas, this company that started with, I believe, doing liquid cooled servers to make them more efficient, last longer, etc. And they're now getting into Bitcoin mining, where they're doing liquid cooled Bitcoin miners, which is much more green in their approach, using less energy overall. And the mining power, they're able to get like 20% more power out of each Bitcoin miner as a result. So it's stuff like that. Is a lot of that
just due to the temperature, keeping the temperature down to...
Yep.
Okay.
And so I think there's going to be more of that type of innovation where it's not really going to be a big energy drain on the system, where that's what a lot of people that are hating on Bitcoin and cryptocurrency in general are basically saying. It's the carbon emissions that are created just from mining Bitcoin and keeping the system alive are directly impactful to global warming or climate change, which to me is ridiculous. I mean, if you add up all of the energy utilized by the company Chase Bank, they have how many branches, how many offices, how many transactions per day. If you compare it just to that, I would have to imagine Chase Bank as an entity takes up way more energy than the entire Bitcoin network. So to me, it's all a stupid conversation. It's just a technology that this is the way it works. And people in a capitalistic environment will figure out ways to innovate on it and make it more efficient and hopefully more green longer term.
No, absolutely. So I think this is a good point to switch over to maybe the inflation watch, or are we looking at interest rate Thursdays? I know we've got interest rate Wednesdays over here, but we're on interest rate Thursdays because it's a Thursday. Well, technically, it was Wednesday when the interest rates went up. So Papa Powell's got us up a quarter point. And I believe there's 7 more meetings throughout the remainder of the year. So it'll be interesting to see. The original talks were about 0.5%, and obviously that didn't go through. I'd have to imagine that Russia and Ukraine is a huge component of that. So we're up 0.25%, and the markets seem to be okay with it. They seem to be pushing forward, and I think a lot of that was the correction that we've seen over the last, month, 2 months, 2.5 months, where maybe some of that anticipation was priced in, and maybe the fact that we weren't bumped up a full 0.5% rate and only went up a quarter but I was very surprised and very excited to see, there's still confidence in the market. Yesterday it was up. Today it looks like we're up a decent amount as well too. Nothing crazy, but we're still in the green.
Yeah, so speaking of green, I don't know if you recall on our first episode, we talked about stocks that we're buying right now, or predictions on those stocks.
I joked around about buying Peloton.
Yeah.
How's my prediction so far?
Let's revisit. So
okay, we got to give the listeners an update.
My bet was Amazon, which I wound up buying.
That's not a fair pick. It's not a fair pick.
That's how I work. I choose the unfair advantages. So I bought it at $29,950 a share, and I bought 10 shares at the time. So since then, it's gone up and down. But as of right now, the share price is $3,139 for a net gain of $1,444 on my bet. On top of that, I don't know if you also saw, they announced a stock split, a 20-to-1 split.
They did. Mm-hmm.
My 10 shares are going to turn into 200 shares, which doesn't mean anything from a pricing perspective. I'll have the same amount of money within the company. But with stock splits, what generally happens, the whole purpose of stock splits is to reduce the cost per share so that public retail investors see it as a more palatable share to buy into. If you're looking at a $3,000 per share cost of Amazon, it's going to be a lot harder for somebody with, $500 or $1,000 to put into the market to take that approach, even though they could and get a percentage of a share in some cases.
Yeah, it depends because it depends on the platform that you're using. There's still platforms out there that won't allow you to buy partial shares.
Right. But if you're on like a Robinhood or something like that, you can buy partial shares. Either way, if it goes 20-to-1, the price is much lower, a lot easier for people to get into. The theory is the price will continue to go up because there are more investors that'll have the ability to buy it. So always
Does Amazon have a divvy? Do they have a dividend?
I don't believe so. No.
It'll be interesting to see when they decide to do that.
Amazon doesn't pay a dividend to its stockholders, which has been true since its inception.
Yep. Okay, so should
Peloton.
We pivot to Peloton?
Yeah.
First of all, that was a joke, and I hope to God that nobody bought any Peloton. But it looks like it's right around the same.
Yeah, I can't remember when was that first video we did? Do you recall the date?
I don't. I think so. I believe it was priced somewhere between $27 and $25, and we're about 24. So can I change my recommended stock? And then I'm just going to tell you what I do.
Yeah.
Every day, buy a partial share, or if you can do a full share, do a full share of VOO and VTI up until you've got a few $100,000 in that. It's going to pay a dividend.
For us idiots, what is VOO and VTI?
So they're Vanguard and ETFs, and VOO is gonna track I believe it's the top 100 companies in the S&P 500, and VTI is the total stock index. So ultimately, by purchasing VOO and VTI, what you're doing is you're getting a share of the top 100 companies. Additionally, you are getting exposure to the entire stock market. And my theory, not financial advice, is if you buy in every single day for the rest of your life, you don't want to get this to the point where you've got millions of dollars in just VOO and VTI. That's not a good strategy. But for accumulating dollars up front, up until a few $100,000, it's a great strategy because in theory, it's going to continue to go up. I think on average, the S&P 500 over the last 50 years or 100 years, whatever, it's been 10 to 12%. And then the entire stock market with VTI. So you're placing money, so you're hedging your worries about the stock market going up, stock market going down. And ultimately, there's a study done that highlighted if in the last 10 years, if you had just missed, I think it was like 7 to 12 trading days, the percentage of return was like 30 to 40% differences. So if you're trying to time the market and you're selling at this date and then you're buying at this date, the chances of you missing those dates and losing out on an additional 20 to 30% compared to, okay, if you somehow hit those dates right on the head, hit the nail on the head with a hammer, then maybe you make 2x or 3x, but ultimately it's gambling at that point. So my thought is you buy VOO, you buy VTI, and they both have a dividend too. So Amazon doesn't have a dividend.
Well, how fucking boring is that?
I know, that's the most boring way to do it. So,
but the smartest, and I haven't myself been smart enough to take that approach yet.
And then if you want to get risky, then you start buying Cardano. You buy Cardano at 250. That's what I did. It's at 84 cents. You buy Ethereum at 3,500. What's it at now? It's about 2,500. You buy Bitcoin at $6. I was dollar costing average into Bitcoin in between like 60,000 and 68,000. So there's, it's all about time. It'll work out eventually. That's what I keep telling myself.
Yep. So just a little preliminary research. I believe we recorded that first episode around February 6th or 7th, which would put the price of Peloton closer to about $29, and we're sitting at $24. Just to twist the knife even further in your side.
So your takeaway here is, if anybody is listening to this, don't listen to Chris's guidance on investing. Listen to Eric's.
Well, your recommendation just now is much better than mine, so everyone should take that as their investment advice. But also, that's not investment advice.
Exactly. All right, so let's talk about this car. What's going on with
Jerry Seinfeld?
Yeah, Jerry. Coffees with comedians, right? Is that
comedians in cars getting coffee? Yeah,
there we go.
His wonderful Netflix show. Jerry Seinfeld of Seinfeld fame, as most of you should know by now. He's a big car guy. In particular, he's a big Porsche guy, and he has a $300 million car collection, something to that effect.
Oh, geez. I didn't realize that.
Yeah, he's got a lot of cars. He's always at Barrett-Jackson. I've seen him there a couple of times. Maybe not recently, but he more recently, and I don't know if it was him that actually put the car up for sale, but there's a website called Bring a Trailer, which is essentially Barrett-Jackson on the internet. It's an amazing website. They're doing a lot of revenue, which I wish I would have thought of this myself, but nonetheless, he put up his Porsche Jerry Seinfeld 2004 Porsche Carrera GT, which for those of you who follow the supercar market, these have been going up quite a bit in price over the last few years, just like most cars, but this in particular.
We've got a friend who has one of those.
Yeah, we're still waiting to interview. Hopefully soon. But there have been 3 or 4 of these that have been put up for sale on Bring a Trailer over the last couple of months. In fact, one from our local neighbors at Auto Car Club in Scottsdale. That one, let me see if I can pull that one up. The Auto Car Club edition of this Carrera GT is the highest selling Porsche Carrera GT ever. It sold for $2 million on January 18th. This example had only 250 miles, so essentially mint condition. And, just look at the photos. It's professionally done and professionally stored, which made it what it is and why it went for so much money. So after that, there was one other that went up for sale. Where was it? I guess it was this one. That had 2,600 miles, sold for $1.65 million. And then Jerry's went up thinking that because his name was attached, it was going to break all these records of sale price. It has 3,700 miles, so he drove it, which I recommend anyone who gets a car like this should drive it. But it wound up disappointing with a sale price of 1.865, so it didn't quite crack the 2 million barrier. And people online have been talking about it since, saying that this is a bad approach to selling cars, that if you're going to attach someone's name to it as a celebrity endorsement, it may not get the value that you think it will. So I thought it was an interesting thing. Just crazy in and of itself that these cars are trading for close to $2 million when the original list price was, I think, around 400 grand.
Yeah, that was going to be my question is
back in 04. Insane. So yeah, if you have money, if you have actual money, this type of money, then my investment advice, which is not an investment advice, is to buy rare supercars, rare wine, rare watches, and just hold them in a safe place. If they can be professionally stored, great, because they will continue to go up substantially in value, regardless of inflation, regardless of where the economy's at. I think these have been some of the best performing assets, including, I guess, fine art too, but that's more of a money launderer's game than some of these other assets. So that's my spiel on the car segment for the day.
No, that's perfect. And then next week we're going to have to touch on watches, because on the 30th, the 30th, we have Watches and Wonders 2022, and that is where Rolex essentially releases their new models. Yeah, they're going to announce the new models. So we'll have to keep an eye on that, and sometime next week we'll have to hop on and see what they did. I'm hoping they keep the green sub around, but I've heard some talk about a gold one with a green face, potentially a red face sub.
Whoa.
Or a red bezel. So I know. To talk about discontinuing the green and gold Daytona, the John Mayer that we had talked about, I believe, on our first segment. So there's going to be some movement, or they could do what Rolex does and keep everything fairly boring and add some small things here and discontinue a few things here, but we'll see.
So I have a prediction. I think whether it's a Rolex or another major brand, this year in the Chinese calendar, it's the year of the tiger, and the Chinese market is huge for luxury goods. So I predict that Rolex or another major brand is going to release a tiger themed watch, whether that's the face that's more of like the tiger stripes or something to that effect. I think we're going to see some of those come out. So what do you think?
Yeah, so Rolex has already done this. Here,
really?
Let me share my screen. Yeah.
I didn't do my research.
Yeah, so this was the Eye of the Tiger Daytona. I don't know.
When was this launched?
This is on an Oysterflex watch. On an Oysterflex band. So within the last few years, Oysterflex are fairly new. But they did do the Eye of the Tiger a few years back. I'm not sure exactly when it was released, but
we'll bring it back. Make my prediction true.
Right, exactly.
Maybe they'll do that with a sub or something.
Yeah, we'll see. We'll have to maybe we sit down and have a glass of wine and watch do a little live stream while the event's going on.
Sounds like a plan. All right, that's it. Oh, and we're still not endorsed or sponsored by Good Life. You know, the Good Life shirt. If you feel good, you look good, or if you look good, you feel good. I forget which one I did the last time. Let's go with, if you look good, you feel good. I guarantee it. And hopefully we get sued by the Men's Warehouse people for saying that and get us some media traction there. So we'll see.